presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Eddie in Boca Raton. Hey, Eddie, what's going on?
Hey, Tom. How are you, man?
I'm doing great, man. Yourself?
Good. It is a treasure to have TFNN every hour during the trading day, to be there to help you, to guide you, and even to give you some peace of mind, or like that somebody else is there with you while you're trading this crazy market, either up or down.
Well, listen, we appreciate you growling and prowling us out here, because we wouldn't be out here, folks, if we didn't have all you guys, gals, tigers and tigresses as clients. And, you know, the market teaches you every single day, man.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks so much for joining me this afternoon. It is Wednesday afternoon. We got about an hour left in the trading day, and you have markets right near all-time highs. How about it? S&Ps this morning, 6502, first time ever above that 6502 price, that 6500 price mark. Holding up well, up 11 points, but just off the highs. As I mentioned at the top of the hour there, it's not the NASDAQ leading it right now. You have the NASDAQ down by 12 points, as you have the Dow and the Russell leading the way. NASDAQ right now, jump back, you hit 24,068. That's an all-time high, and we've just barely given up the action. You take a look at the volume. Now, we might get some volume today. We'll see how the day ends. And we've had some spikes on the selling, but we've risen on a little bit lighter volume. We'll see how today plays out. Nonetheless, NASDAQ slightly in the red. Dow up by 0.9%. Dow within about 300 points of its all-time high on the futures at 45,312. And the Russell, as I mentioned, leading the way. You have the Russell up about 100 points from where we were trading just yesterday. Remarkable, let alone that spike low we got on August 1st. You're talking about 180 points. 180 points from where we were trading less than 2 weeks ago. So a little bit of a rotation into the Russell right now. We'll take a look at some of those equities. You jump over to yields. Treasury Secretary this morning, live on Bloomberg. Now, you got the CPI data yesterday. The market rejoiced instantly. You gave it up a bit in terms of higher price, lower yields, but we're getting that confirmation today as you're up by 12 ticks right now, and you got a 10-year that's flirting with about 4.23. We're at 4.24, okay? The yield on the 10-year right now, 4.24 right now. Market, almost 100%, 99.9. That Fed watch is what they're pricing in for a potential cut in September, potential, but it's basically priced in. Things can change. We get a whole nother month of data, because that meeting is in the middle of September. But right now, you got higher price, lower yield, and that's been causing some weakness into the dollar. As you get the dollar below 98, we're trading at 97.85 right now. You take a look at the dollar. Now, when we were at 96.37, okay, that's when you had the 10-year yield at about 4.19%. Now, we got quite a bounce. Things have reversed since then, since where we were. And amazing that the whole month of July, right? You had dollar strength. The low was on July 1st. The high was on July 31st. And I remember reading articles talking about, man, the dollar had a banner month in July. It was like, well, you know, timing is everything sometimes, right? And the month of July, it was a great month. But it was a bounce within a downward column right now. And we got the dollar under pressure. We're off by another 244 ticks at 97.85 right now on that dollar. Yeah, Treasury Secretary this morning, he was talking about, hey, we want 50 basis points in September. And you know this administration wants lower rates. And if the market's pricing in a cut already from September, then the only way to push for more is, yeah, we're pushing for 50. And he was talking about 150 to 175 basis points overall from where we are right now. That'd be quite a cut. All right, let's take a look at some equities. And boy, we got some equities moving, man. How about Apple? So we jump over to Apple, up by $4 or 1.75%. This thing has been on a tear since their White House event last week. I mean, you're talking about up from almost 200 to 230. That's a 15% acceleration for Apple shares. And this one, though, today is talking about AI robots, home security, smart displays, and all when it comes to AI. Yeah, new devices, robots, Siri in a lifelike version, and a tabletop robot that's going to serve as a virtual companion. Guess what? We're talking about 2 years from right now. It's always amazing how the market reacts. But nonetheless, you have market higher, and it's part of Apple, the effort to restore Apple's mojo, as Bloomberg puts it. At the same time, yeah, are they missing out on that generative AI revolution? Well, though Apple is in the early stages, as they say, executives see the pipeline of hardware as a key piece of that resurgence. So we'll see if it plays out. They tried to do it with Siri originally. Alexa took off. And yeah. All right, Oracle. Now, we talked about Paramount. Okay, Paramount Skydance having quite a moment this morning. A little bit meme-esque. Not fundamentally driven. But this is not the same as an AMC or a GameStop type. This is a real company, number one, CBS Paramount, okay? You just had the second richest person in the world have their son buy this, Larry Ellison. He's worth about $300 billion, only behind Elon, and the market's jumping on board, and they like the idea that they're going to be in the UFC. You had an acceleration yesterday, and boy, today, yeah, a little bit irrational. You go from $11 to $17.53. We're back to $15.43 right now. But longer term, boy, that deal they signed, this is only a it was an $8 or $9 billion company yesterday, okay? That number has changed. But they were only a $7 billion company when they signed that deal with the UFC. How about that, right? The whole company is valued at $7 billion. I think Skydance purchased Paramount in $8 billion, but as they were coming to market cap where they were trading, and they signed a $7.7 billion deal. But guess what, man? There's nothing like live sports, folks, when it comes to the fear of missing out. No more pay-per-view, and I was talking about it yesterday. So, yeah, short term, yeah, you can expect we might get some pullbacks here. Longer term, okay, yeah, I like the idea that they're going to be airing UFC, and once a month, every Saturday, when that airs on that monthly big event they have, the amount of signups they're going to get when all you got to do is sign up for Paramount. And we have Paramount in my house, folks. I tell you, for kids, you're talking about Nickelodeon. All the Sonic movies are on there. Transformers movies are on there as well. Hey, for what it's worth, quite the acceleration. Now, though, you jump to Oracle. So Ellison, now this thing has been on quite a tear, of course, pushing highs at 260. You back this up on a weekly, man, right? Quite the acceleration. You come back and test the lows we were at 2023, almost where we were in 2024, and this trades from the April lows of 118 to 260. Now, Oracle, they're going to be spending. All right, I always hear those OCI ads on Bloomberg. If you listen to Bloomberg Radio at all, great ads in terms of Oracle Cloud infrastructure, and that's part of the reason. But yeah, they're cutting jobs in that cloud unit as they're taking steps to control costs, because guess what? They got to spend the money on the infrastructure. But the market today is saying, hey, hold on a second, man. You are growing gangbusters and you're cutting right now. Spending's going to be an issue, folks, and it's in focus today. Oracle down by 4%. All things considered, though, you talk about quite a run for this equity. But boy, you're getting quite a engulfing candle, and you're going to do it with some volume today. All right, folks, stay tuned. We're going to be coming back with Sean Edwards from Direction, Vice President, Institutional ETF Strategist. We're going to be talking some equities. We'll be talking some ETFs. We'll be talking some semiconductors. Always a great segment. We're coming back with Sean. Don't go away, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We got all the markets in the green right now. NASDAQ lagging a bit. NASDAQ 100 up by 2 points. S&P up by 15. And right now, folks, we're going to jump over to our man, Sean Edwards. Sean is Vice President and Institutional ETF Strategist with Direction. And, folks, if you head on over to the front page of TFNN, you'll see some beautiful Direction banners. Click on those banners. They'll bring you right to the front page of Direction, and I love it, Sean. I'm looking at it right now. Daily leveraged and inverse ETFs for traders averse to being risk averse. I love it, man. Sean Edwards, good afternoon.
Absolutely. Tommy, thank you. Thank you for queuing us up. We appreciate it. Once again, thank you guys for having us today.
My pleasure. I was going to say, hey, Sean, you're talking to people that we jive with what, being risk averse. It's risk versus reward, as we know in this market, man. You
Absolutely.
guys have some great products, and we got quite a market. And I know we were chatting earlier in the week, getting ready for this interview, and of course, many equities in focus. But I wanted to ask you about NVIDIA and AMD, some of the semiconductors, of course, in focus with tariffs. But if you could talk to me, you guys have some great single stock as well as ETFs, what you are seeing and what you're thinking about what's going on right now, NVIDIA, AMD, and in this market, Sean.
No, absolutely. I think we've all seen it. Two of the biggest chip makers in NVIDIA and AMD, we saw that they've agreed to pay the U.S. government 15% of their revenue from AI chip sales to China. So effectively acting as an export license fee, right? So we see that these are two of the largest chip makers. You may say, hey, Sean, why are you bringing this up? So again, Direction, we're a leverage and inverse ETF provider. We provide tools for traders that are interested in trading volatility that takes place in the market. So this semiconductor global trade, revenue sharing agreement, it's definitely causing, volatility within the semiconductor space. We haven't seen an arrangement like this ever. We see that AMD, 20% of their revenue comes from China. And for NVIDIA, 13% of their revenue comes from China. So this is definitely increasing volatility and uncertainty in semiconductor stocks. For NVIDIA and AMD in particular, if you're interested in trading the short-term price movements of NVIDIA or AMD, you can look at our leverage and inverse single stock ETFs on NVIDIA. The ticker symbol there, if you're bullish, if you believe that NVIDIA's price is going to rise, you will look at ticker symbol NVDU. And if you're bearish, the price movement of NVIDIA, you can look at ticker symbol NVDD. And so for AMD, that's the Direction daily AMD bull 2x and bear 1x shares. Those ticker symbols there, if you're bullish, you look at ticker symbol AMUU. And then if you're bearish, you look at ticker symbol AMDD. And I'll stop there just to prep you guys even further. There's quite a few more ticker symbols to get through. So if you have a notepad, definitely be sure to write down those ticker symbols. So those are the two ETFs that are directly impacted by this revenue sharing agreement that we're seeing taking place between those names and the U.S. government. But if you want broader exposure to some other large semiconductor stocks, we have a suite of ETFs for you. So again, these are leverage and inverse single stock ETFs. They're meant to be used tactically, so short-term trading tools. They're not your standard buy and hold ETFs by any stretch of the imagination. As Tommy mentioned, more risk, more reward. We love the reward, but there's added risk. So if you're holding these long-term and the trade is going against the trend that you intended, it's going to be a trade that you probably want to get out pretty quick. But the other names that I wanted to introduce are names like Broadcom, Micron, Taiwan Semiconductors. So if you're interested in those names, if you're interested in Broadcom, for example, you can look at ticker symbols AVL and AVS. That's the direction daily Broadcom bull 2x bear 1x ETF. For Micron, it's going to be ticker symbol MUU. That's our bull ETF. If you're bearish, you look at ticker symbol MUD. That's our bear 1x ETF. So again, the bull, all the ETFs that I'm saying that are bull, they're 2x to the upside. The bear ETFs, they're just the single inverse. So you could look at hedging a position that you may have in these names. And then lastly, the individual stock that gives you exposure to semiconductors will be Taiwan Semiconductors. So that ticker symbol there, if you're bullish, again, 2x exposure to the upside. That's ticker symbol TSMX. If you're bearish, you will look at ticker symbol TSMZ. And so again, that's the bear 1x ETF. So quite a few ticker symbols. We have even more to go through. If you're looking at broader exposure, so you want a basket of semiconductor stocks that you want to trade, you can look at the direction 3x bull ETF, that's SOXL, or the direction 3x bear ETF, that's SOXS. So again, this is going back to an index exposure. So this is the NYSE ICE Semiconductor Index. So if you want to trade the broader semiconductor sector, you will look at ticker symbol SOXL or SOXS. And then keeping it really broad, if you just want pure text exposure, you can look at the NYSE Tech Select Sector Index, and that ticker symbol there is TECL and TCS, and that gives you exposure to the direction 3x bull and bear technology ETFs. So quite a few ticker symbols. These are all trading opportunities around the semiconductor sector. Again, we're seeing some unprecedented news within the semiconductor space. So some really good tools if you're interested in trading the individual single stocks or broader indices that give you exposure to semiconductors or technology.
That's great stuff, man, and it is so awesome, I think, these single stock ETFs. And folks, if you're watching this, all right, I hope you're writing them down. We archive everything right on YouTube, so if you didn't catch it live, go right back there. You can always hit the direction banner. And, you know, I was looking, Sean, just even today myself, the NASDAQ 100, I think we're up 46 or 48% from the April lows. I was going through Broadcom as you were talking about it. I mean, Broadcom on fire, of course, from a low of below 150. But even the double,
Absolutely.
which is so amazing, AVL, and I say it's only a double, because only a double just went from $10 to $50. And yes, as you said, and you say it so well, man, you know, with risk, with reward comes risk for sure.
Absolutely.
But boy, we got quite a market, man. So if we can shift a little bit, the Treasury Secretary was live on Bloomberg today. I think we're all aware that pressure is on the Federal Reserve Chairman for rates, and we are at about 4.25 right now, Fed in focus. Talk to me about rates, man. You guys got some great ETFs talking about fixed income as well, please. Did I lose him? Did I lose him, Al? You still got me? I think we lost you, Sean, if you're there. All right, maybe we'll get him back, folks. You have me, Al? All right, I appreciate it. We'll get Sean back on, folks. He's going to talk to us. We'll get him back in here because, yeah, with rates in focus, you see the volatility. They got a couple of great, whether you're talking about longer term or shorter term. And it's the TMF and the TMV, folks, okay? And I love these things, man. There's your TMF, okay? And that's the daily direction 20-year, okay, Treasury bull and bear. Sean, are you there? Maybe. And that's the 3 times, okay? That's the 20-year plus 3 times, TMF and TMV. And then you jump over, if you want a little shorter term, you're talking about the 7 to 10-year 3 times, TYO and TYD. So check those out, folks. Head on over to the front page of TFNN. You'll see those direction banners and those single stock ETFs. They got one for Ford up there. I was checking out. Check that out. Always appreciate it with Sean, and we'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
welcome back, folks. And we have our man Sean Edwards back, Vice President with Direction. And Sean, thanks for jumping back in, man. And because I know I left some listeners there, we said fixed income, we talked about rates. So please, let's jump right back in. Talk to me about some of the products you guys have with rates in focus right now. We got him? Uh-oh. All right. I can't hear him, Al, if we got him. Okay. His mic went muted again. All right. Well, we went over at TMF and TMV, folks, TYO and TYD. And what's so cool about those is that you can get wherever you want to be on the curve. The TMF and the TMV, okay, if you're looking longer duration, that's the Direction Daily 20-plus year Treasury Bull and Bear, the 3 times, so TMF. Let's put it back on a daily. Okay, that's your 3 times 20-plus year Treasury Bull and Bull. TMV is going to be your bear. And then you go over to shorter duration. If you're looking for 7 to 10 year, you're talking about TYO, and then you're talking about TYD as well. The bull and bear 3 times. And as Sean mentioned, those single stocks, okay? The single stocks, when you're trading them, what's so cool is the bull is usually going to be a 2 times exposure, okay? And the bear is going to be a 1-time negative exposure. So if you're just looking to hedge, the bear is an exact 1-to-1 of whatever position you're looking to hedge. If you're bullish, then yeah, you get double the exposure, leveraged in inverse ETFs. And I tell you, folks, as a trader, okay, it makes a lot of sense if you're anywhere in the short-term realm. And as Sean put it, okay, they're daily investment vehicles. And if you hold them for the long run, your return might not be representative of the underlying because of the leverage nature of those ETFs, okay, and single stock ETFs in that regard. But as a trader, it's a no-brainer, folks. If you're trading in equity, you get double the exposure. Why would you not do it? If you're swing trading, if you're day trading, and yeah, I mean, some of these tech companies, whether you look at, but how about AVGO, right? The underlying equity, you go from a price point of 138 to 317. Well, geez, I don't have to tell you, if you're adding leverage to a single stock ETF that goes from 140 to 300, but as I said to Sean, even just being a double, you got a 400% gain there, going from 10 to 50. Remarkable. All right, let's jump around to some of the equities. As I mentioned, Amazon shares up by 1.3%. So we jump over to Amazon shares today, and you have Amazon. We'll get there. There we go. Nope, not quite. We got too many good tabs. There's a lot happening today, folks. Forgive me. Here we go. So you have, there we go, Amazon. Same-day delivery, meat, eggs, and produce, right? They've been trying, as in they've been in there with Whole Foods for how long now? But yes, they're launching the service in more than 1,000 U.S. cities, okay? They're going to expand to at least 2,300 locations by the end of this year. Same-day delivery of fresh foods to more pockets of the U.S. after testing that program in Phoenix and other cities. Now, what's so interesting is, so you get that news today, okay? And then what else do you get? Walmart says, yeah, we're doing that too. And whether Walmart did it first and Amazon did, grocery discount, 1.6 million employees as tariffs for new inflation concerns. Different deal, okay, but still groceries in focus, right? So much of what Walmart does is groceries, and one perk they're going to bring to their employees now is a 10% employee discount on nearly all groceries. It's quite a statement. It is quite a statement indeed. All right, and I think we got him back. Let's do it again, Sean. Sean Edwards, you back, man?
I am back. 3rd time's the charm,
gotcha.
Tommy.
No, it's perfect. I said, hey, we're doing live television, baby. That's how it goes. And as I said the first time, so let's do it, man. Talk to me about some of these great ETFs you guys have with rates in focus right now. Please, Sean.
No, for sure. And we are finally here. So, again, mounting pressure on the Fed to cut interest rates, as we're all seeing. So if you are a trader and you are interested in trading the volatility around a potential rate cut, there are a few different ways that you can approach trading our leverage and inverse ETFs. I'll talk through 3 and present a few ticker symbols. So once again, write down the ticker symbols. Again, Tommy, thank you for queuing it up. If you are interested in trading the short-term price movements around fixed income related equities, you can look at the Direction Daily 20-plus year Treasury Bull and Bear 3X ETFs, as Tommy mentioned a little bit earlier. Those ticker symbols are TMF. So if you're bullish, you'll look at TMF. So bullish, bond prices increasing or rates dropping, you'll look at TMF. If you're bearish, bond prices, then you will look at ticker symbol TMV. And so again, those are 3X Bull and Bear ETFs on the 20-plus year Treasury Bond Index. If you want to go to the somewhat shorter end of the curve, you can look at the Direction Daily 7 to 10 year Treasury Bull and Bear 3X ETFs. The ticker symbols there are TYO and TYD. So once again, same concept. If you're bullish, bond prices increasing, so that's betting that rates will drop, you would look at our Bull 3X ETF. So that's TYO. But if you believe that bond prices will drop and that rates will stay the same or go higher, you will look at our Bear 3X ETF. So that's TYD. Now, additionally, growth in tech stocks. We already mentioned tech a little bit earlier, so you can look at TECL, TECS once again, because growth in tech stocks, they're sensitive to yield changes. And as we know, volatility presents trading opportunities. What you'll see recently is that small caps have begun to catch a bid on the chatter of a potential rate cut. So if you want to look at small caps, you can look at ticker symbol TNA and TZA. That's a Direction Daily Small Cap Bull and Bear 3X ETF. That's exposure to the Russell 2000 index. So again, growth exposure. If in fact rates drop, you can look at those companies that need to borrow money to grow. So again, give you exposure to the small cap index, which is the Russell 2000 index, ticker symbol TNA and TZA. Those are 3X Bull and Bear ETFs. Once again, ETFs designed for tactical short-term trading. Lastly, gold. We always talk about gold. Now, gold in this case, if the Fed decides to cut interest rates, the price of gold tends to increase. We've seen the run-up in gold so far this year. Some of you traders may already have exposure to nugget or dust. So once again, that's the Direction Daily Gold Miners Index Bull and Bear 2X ETFs. So NUGT, that's if you're bullish. And then DUST if you're bearish. And just to highlight once again, these funds track a commodity-related equity index consisting of a basket of gold miner-related stocks. So not spot gold prices, but there's correlation there. And if you want junior gold miners, you can look at ticker symbol JNUG or JDST, and that's the Direction Daily Junior Gold Miners Index Bull and Bear 2X ETFs. But once again, tactical short-term trading tools gave you a lot of tickers. These are arrows for your quivers. As a trader, you want to have many arrows and trading ideas and tools that you can use to take advantage of your investment theses. So once again, Tommy, thank you for having me. I wanted to run through those opportunities that we're seeing in the market right now and tools that you can utilize to trade the volatility that's present in the current market.
Sean, thank you so much, man. It worked out. We got even more time with you, and we got to go through it all. You covered all the bases, man. I know everybody. We're talking about gold. You're talking about Nugget, man. Nugget from $34 this year, folks, up to $93. And as we know, gold having a run. Sean, tremendous, man. I appreciate it. Folks, check out the Direction banner right on TFNN. And Sean, appreciate it. We'll talk to you next month when we have you back on. Can't wait, man.
Absolutely.
Thanks so much. Bye-bye. Thanks. Folks, stay tuned. We got the S&Ps right now up by 11 points. We got the NASDAQ 100. We're down by 20. And stay tuned, folks. We're going to take a quick break, and we'll be right back. And, boy, we got markets. And, yeah, how about that Russell? Russell up by 44 points right now. And you talk about it, man. You talk about it indeed with a little rotation. And check out that TNA and TZT. Yeah. Wow. Remarkable, man. All right. Let's head to break, buddy. It's supposed to be at 4:39 past, all right? Okay, stay tuned, folks. We got the S&Ps up by 12, NASDAQ in the negative, and, yeah, the Russell on fire. You're looking at the Russell right now, 2335. We were sitting 100 points lower just yesterday. And check out those banners, folks. You saw them. They got so many great ETFs I was even talking about. I saw they got Ford. Just went past Ford single stock ETFs. You're trading? Check it out, folks. Direction. Yeah. Leveraged and inverse ETFs for traders averse to being risk averse. I love that line. Oof. All right, we're coming right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. So we got Paramount up here, and yeah, the headlines keep coming. And, you know, it is not a meme deal. And yes, it is, okay? But it's not the backdrop. This is a different deal in terms of a meme deal. This is the second richest person in the world, folks, and you're talking about Larry Ellison and his son, okay? You pull up the Bloomberg Billionaire Index, okay? He's only behind Elon, folks, and Elon's got quite a lead, okay? But Larry Ellison, $306 billion, most of that in Oracle, and his son, his son's only spending half of what he'd make if he put that money into CDs this year, right? You put that money into CDs, you get yourself 4 or 5%, 4%, I guess. You're making, point being, not a lot of money compared to his wealth. That company's not going to fail lightly. Let's put it that way. There's no way he'd sink everything in, but I think they got a good system, man. It's remarkable that they were still trying to get pay-per-view. When you compare UFC with ESPN, folks, that's not the model, okay? You never make the most money by having consumers pay for it. The way you do it is you give it away for free and you sell the advertising, right? That's the model. It always reverts back. You're seeing it with the streamers now, whether it's Netflix, Disney, etc., and it's coming to Paramount, man. And yeah, so they're talking about, you got Transformers, Michael Bay. That's another great clip. We have Paramount in my house, and I often talk about, we love technicals, folks. We love price and volume. But listen to yourself sometimes, too. Doesn't mean you're always going to be right, okay? But I would never touch a UFC pay-per-view at $99. I love competition, but no way, man. You're kidding me, right? One event? No, but guess what? They're going to give it to everybody for $12 a month, and then they're going to put it on CBS and sell ads for it. Then they're going to bring Michael Bay back to Transformers, right? And you have the richest, second richest man in the world. And do you think he's going to have some influence, folks, over that money, which is really his that he gave to his kids being spent? Yeah, you better believe that he's going to, okay? And so that's the other side of what's going on here. And yeah, irrational high of 1753, but on a longer-term basis, Paramount's a good product. CBS is a good product, okay? And you're only talking about an entire market cap right now of $7 to $8 billion, and we're well above that right now, I'm sure, at this valuation. What are we pushing? No, not that far. 10.2 is the number you're at. So they turn that around. Yeah, this company is going to be well worth more than $10 billion if you turn it around. Yeah. Ellison's no fool. He's hooked up with the president. He's got a lot going on, and I imagine that deal is going to go well for investors. Doesn't mean it has to happen, but as Sean was saying, it's a risk-reward game, folks. Okay? And at the valuation of $10 billion, running CBS, running Paramount, controlling the UFC for 7 years. 7 years! That's a long time to have exclusive rights for streaming to a product like the UFC that has a cult following. And I'm not even part of the cult following, but I'm going to be watching it for sure. All right, we check out some of the other equities right now. You jump back to Amazon, up by 1.25%. Google shares, let's put it back to a daily. Yeah, we were slightly higher. Google with some volatility today. Check out this move, right? So Google spikes at 230 on a news-driven event, I'm sure. What do we got going on here? The Google store bans all crypto? Not sure, but you got some action on Google nonetheless. Down by about 0.7% right now. We jump to those chip stocks. NVIDIA off by 1.2. How about AMD today? Up by 5% to an all-time high, recent all-time high, because you haven't got above where we were last year at 227. You make it down to 75, and yeah, we're coming back to test the highs. And check this out on a monthly basis. Last March, AMD did 1.5 billion shares. Well, it's only August 13th, and we've already done 805 million shares. So you theoretically could plow above that with volume. On a weekly basis, we check out AMD. Yeah, quite the reversal of that downtrend channel. But on a weekly basis, so check this out. You do 334 million and 423. It's going to take a lot of volume to get above those highs in March of 2024. All right, we jump over to Intel shares, up by 1.8%. Some of the concerns in that equity with the CEO and the president bringing the heat, easing this week. Intel continuing the rise upward at 1.8%. With rates in focus, folks, I was talking about the home builders today. Look at this. It's not stopping, man. Okay. Look at this. The whole market's waking up to the idea that things have turned, okay? Lennar up by 6% today. These home builders have been waiting for it, man. And when I come back from this break, folks, we got a break coming up in a minute. I did a great analysis today, just showing you real quickly what can happen in terms of what kind of house you can afford on a 6.5% mortgage versus what kind of a house you can afford on a 5.5% mortgage. Folks, the housing prices are going to go up by 12, 13% just on a 100 basis point mortgage reduction. Okay, that's what's happening in this market right now, no matter where you look in the home builders. Lennar up by 6%. We're 30% off the lows now for Lennar, even more. You jump over to DR Horton, yeah, up 6% today, up $57 off of the lows. KB Homes up by 5% today. Oof. We got some moves, man, in these home builders. Jump back to rates right now. Yeah, it's coming back to test the highs, but today's the day. Yesterday there was a pause. We gave it back, but today, Treasury Secretary in Focus Live, and just the market, I think, accepting the reality that we're getting a cut in September. And hey, things can change. They can change in 30 days. We get a lot of data in between that now and that September meeting, right? We got over a month until that September meeting, folks. But I'll come back. We'll take a look at those mortgage calculations. Home builders catching a bid, man. With the S&P up by 17. Keeping our eye on some of the meme volatility. Paramount Sky up by 39%. Amazon shares up by 1.4% right now. CoreWeave on the flip side of that, yeah, look at this stock. Down by 20% on their numbers. All right, folks, stay tuned. We're coming back. We'll talk some mortgage rates. We'll talk some yield. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have markets right near all-time highs, green across the board right now. S&P's up by 20 points, NASDAQ 100 barely in the green by 6, and yeah, you got the Dow up 1.1%, and how about the Russell up another 2 percentage points? But let's talk a little bit of mortgages. Let's talk a little bit of yield, pressure on yields to the downside. And I did this in the morning, but check it out, folks, because this is how big it is. Now, to exaggerate things, okay, and it's not that exaggerated. I mean, lows on the mortgage rate. But let's just say you're purchasing a $600,000 house right now. You put down 20%, you get a 30-year loan at 6.5%, okay? While putting down 20%, you're taking out a loan of $480,000 in this example, folks. If you're financing that at 6.5%, your $480,000 loan amount is going to give you a payment of just over $3,000. You add property tax and insurance, your total payment's about $4,000. So that's your monthly payment. Taxes and insurance included at 6.5% for a $600,000 house. Well, what happens if rates go down to 4.5%? They're not going to 4.5 right now, folks, but this is how big and how quick the example can go. If rates go down to 4.5, you can afford 25% more house. That house you just bought for $600,000? Nah, don't buy a $600,000 house, folks. Go buy a $750,000 house because it's the same exact payment at 4.5%. Now, if you want to split the difference and you say, come on, that's a little bit unrealistic. Rates aren't going to, the mortgage rate is not going to go to 4.5 right away, and you are correct, okay? But let's just say it goes to 5.5, which is totally realistic. If we're going to get 150 to 175 basis points of cuts, as the Treasury Secretary suggested today, well, you know what you can afford, folks? You can afford a $675,000 house instead of $600,000. So just if the rates drop 100 basis points, you can afford 12.5% more house. Right away, every house is worth 12.5% more. Not exactly how it works, but that is the pressure, man, and that's the home builders. Folks, thank you so much. Always a fun hour. Have a great night. Have a safe night, folks. I'll see you back here tomorrow morning, 9 o'clock for the morning market kickoff. Thanks so much, folks. Have a great evening.